The Great Depression, 1929, complete story. The Great Depression was the worst economic crisis in modern history. It began in the United States in 1929 and eventually spread across the world, affecting millions of people. Businesses failed, banks collapsed, unemployment reached record levels, and countless families struggled just to survive. During the 1920s, known as the Roaring Twenties, the American economy grew rapidly. Factories produced more goods than ever before, businesses expanded, and many people believed that prosperity would continue forever. The stock market became extremely popular, and millions of Americans invested their savings hoping to become rich. As stock prices kept rising, many investors became overconfident. People borrowed money from banks to buy even more stocks, believing prices would never fall. This created a massive financial bubble because stock prices were no longer based on the true value of companies. On October 24, 1929, a day remembered as Black Thursday, investors suddenly began selling their shares. Panic spread across Wall Street as stock prices started falling rapidly. Just 5 days later, on October 29, 1929, known as Black Tuesday, the stock market completely crashed. Billions of dollars disappeared within hours, and thousands of investors lost everything they owned. After the stock market crash, fear spread throughout the country. People rushed to banks to withdraw their savings because they worried banks would fail. Thousands of banks eventually closed their doors forever, and millions of Americans lost all of their life savings. As banks failed, businesses could no longer borrow money. Companies closed, factories shut down, and production stopped. Millions of workers lost their jobs. By 1933, nearly 1 out of every 4 American workers was unemployed. Families who once lived comfortably suddenly found themselves without food, income, or shelter. Across the country, long bread lines formed every day as people waited for free food. Many families became homeless and built small communities of wooden shacks and tents known as Hoovervilles. Life became extremely difficult, and poverty spread throughout the nation. The economic crisis did not remain only in the United States. Because international trade slowed dramatically, many countries in Europe, Asia, and other parts of the world also suffered severe economic hardship. Businesses failed, unemployment increased, and the global economy entered a deep depression. In 1933, Franklin D. Roosevelt became President of the United States. He introduced a series of programs called the New Deal. The government created millions of jobs, built roads, bridges, schools, dams, and public buildings, strengthened the banking system, and provided support to struggling families. These reforms slowly restored confidence in the economy. Although conditions gradually improved during the late 1930s, the Great Depression did not fully end until World War II. As factories began producing military equipment, millions of new jobs were created. Industries expanded rapidly, and economic growth returned. The Great Depression changed the world forever. Governments introduced stronger banking regulations, financial protections, and economic policies to reduce the risk of another disaster. Investors also learned the importance of diversification, careful investing, avoiding excessive debt, and maintaining emergency savings. Today, the Great Depression remains one of the most important events in financial history. Its lessons continue to influence governments, economists, investors, and ordinary people around the world, reminding us that economic prosperity requires responsibility, preparation, and wise financial decisions.